upon us. And so I thought I'd do a sneak peek type of earnings all stars video to give you some heads up on what stocks I'm going to be looking at. Now, I actually didn't look at the earnings charts for these going into the video because I did want to kind of be surprised at what is happening there. I do know what their miss and beat records are for the most part. But I want to include one of my favorite charts here at Zacks, which is the price and consensus chart with the earnings surprise and beats. You actually have to be a member here at Zacks.com to actually get this chart, but I am. So I'm bringing it to you so we can take a look at it because this shows you a lot of information on one chart, some of which you might be surprised at. So let's dive right into the 5 stocks I brought for today because these are the ones I'm going to be watching over the next couple of weeks. They are the big names that you would expect, but you might be surprised by a few of them. So let's look at some charts. Okay, so the first one I want to talk about is KeyCorp, ticker KEY. It is one of the banks, but as you can see from this price consensus and earnings surprise chart, it gives us everything here. There's a lot going on. So you can see the lines going down. Those are the earnings consensus lines, and it's going down. So that's not a good thing, right? You want them to go up, not down. But we know what's been happening to some of the bank earnings. They have been coming down. At the same time, KeyCorp, as you can see from the green and red arrows that are on here, that's the normal chart we look at, which is just the earnings surprise charts. They have missed 3 out of the last 4 quarters. So it's been a little rocky on that side of things too. Now the shares are down big, as you can see. They have gotten really cheap. They're trading at just 9 times their forward earnings estimates right now with a dividend yield of 7.6% because of the sell-off. So they haven't done anything to the dividend and it's just continuing to rise there. But is that sustainable? What's going to be happening with all the banks? That's why I chose KeyCorp. It's one of the big regionals, and it will be reporting pretty early in the cycle, right around the 19th of October. So just, a lot of the banks are reporting right at the open. So any of them you can tune in on, but I'm going to be watching KeyCorp. Then the next one I wanted to look at, this is one you might be surprised at, is Tractor Supply. And this is the big rural retailer, for life out here. That's their logo. And they have one of the most spectacular charts, both on the beats, but also look at those earnings. Now, I did cheat a little bit on this one because I looked at it about a week ago and I saw what these earnings were looking like. This is what you want as an investor. You want year over year, steady, consistent growth. That's what it's doing. You see a little bit of a decline in those earnings consensus lines a couple months ago, but otherwise it's still hanging on there with the nice big gains. Also, they've had a big streak during the pandemic. You can see all those little green arrows. They did miss last quarter for the first time since the pandemic started. That's a little shocking. And the shares have come down off of those highs. But if I could get this even cheaper, if they come down further with that kind of earnings growth, if they can continue to sustain this, that's what we're going to find out this quarter. What is the outlook looking like? Then this could be an interesting stock, especially for those looking for a little more value or trying to get into one of the top retailers, which is what Tractor Supply really is. It's trading at 19.8 times forward earnings right now. But of course, if the earnings come down further, then the stock isn't, necessarily all that cheap. But we'll see what they report. But this is definitely one I'm going to be watching on the consumer side. Another one I wanted to look at on the consumer side that kind of gets overlooked, but it really shouldn't by investors. And we look at it all the time on our earnings all stars videos is Deckers Outdoors, ticker DECK. Look at this chart. Wow, I haven't looked at this one in a while. It's even more outrageous than the Tractor Supply. But this is what makes it one of the top retailers out there. This is the UGG and Hoka 1-1, or just Hoka, I guess they call themselves now, Hoka shoes. And, this is where it's at. Both those brands have been extremely hot, especially during the pandemic. But you can see it did have the sell off in 2022. I was watching it and I was thinking, oh, I might be able to get it cheaper. But then it turned, and I've been sitting on the sidelines ever since. But you can see it's got a great earnings surprise track record, just the one miss in 2021, and then just continuation of that earnings growth. It's trading at 23 times, so it's not outrageous on the valuation side, but I thought I might get it under 20 times back there in 2022. And then it never really went that cheap. So still off to the races, but this is one to watch to hear what guidance they're going to be providing. They did have some excess inventory last year, which is what, caused a lot of the stock sell off, but they made it through all of that. And now they should be on a good pace for this upcoming holiday season. But Deckers Outdoors, definitely one of the premier retailers you should be watching this earnings season. Then I can't leave out one of the favorites, and one that's, I feel, a little bit out of favor right now, which is Apple. AAPL, of course, is the ticker. And this is interesting chart from the earnings consensus side too. So it had great gains in earnings in 2021, 2022. You see those lines really going up and to the right. And now it's like a little bit of a struggle. And you can see that the analysts have been cutting estimates. And it also had its first miss in 5 years in that little red arrow there in the start of 2023. I'm sure some others may not have had that miss, but according to the Zacks consensus, it did miss. Let's see, if you hover over the little arrow, you can see. So it was only a miss of 2.59%. That's very small miss, but a miss is a miss. And, a meet is a meet, a beat is a beat, as we always say. And this one, see, they've had some small beats, but that's all it takes. And so we'll see what they say this time. They have rolled out the new iPhone models, but the street doesn't seem all that excited about where that's going to take earnings. So it is still trading at 28 times. So I really recommend, that people tune into this one out of the Magnificent Seven, because it has been the darling over the 5 years, but is it starting to maybe head into the doghouse? We don't know. And then I'm going to wrap it up with an energy stock, because energy is starting to move back into focus again. It was one of the worst performing sectors of the first 6 months of the year after a couple of hot years. But now we see the earnings consensus and the earnings estimates starting to be revised higher with this crude above $90. But can you see it in the earnings consensus here? This is what it looks like when WTI and Brent and natural gas all fall at the same time. You do have, the earnings not looking all that great. But Exxon has a great earnings surprise track record. It just has that one miss. Well, I guess maybe two misses since the start of the pandemic there on the earnings side. And otherwise, it's met or beat every quarter since the pandemic started, including the last, four in a row. And these shares hovering near 5-year highs now. Can they get a breakout on this next earnings report? So they're expected to report sometime maybe the week of October 27th in thereabouts. And so we're going to find out real soon, early in the earnings season, what is happening with the big oil giants. It's trading at just 12.8 times. But again, those earnings have come down, and the shares really haven't come down all that much off of their highs. And it still got that nice dividend yield, but it was paying 4 or 5% even last year in 2022. But because the shares have surged up and the dividend, is kind of still hovering around the same generous size, it still is, not as high as last year, but the yield is still at 3.1%. So that's still a nice yield for these energy companies. And they still have really good cash flows, even with crude and natural gas at the prices they are. But the question for Exxon is going to be what's happening in some of its new discovery areas like Guyana, and where does it see oil and natural gas going for next year? And can these earnings estimates be revised higher going up into next year? You can see that tan line is 2025, and that's looking a little low, but that's way too far in the future for the oil and energy analysts to be concerned about 2025 quite yet. But 2024 will be in focus on this earnings report. So I'm going to be tuning in as well. So you can see these are five interesting charts, all from mostly different areas, except maybe, Tractor Supply and Deckers. They're in the same, retail kind of environment. But I did want to focus on the consumer because that's the area that's kind of the unknown right now. We know what's happening with, construction and to some extent manufacturing, but will the consumer keep spending at their current levels? And when will we start to see the cracks? Like, even with some of the other big retailers we heard from not that long ago, like a Target and a Walmart, they're not really seeing the cracks in the consumer behavior. They might be having other problems in their businesses, but not necessarily with what the consumer themselves is doing. So, when will we see that? Will we see that? These are some of the issues to watch this earnings season. I'm going to be bringing them to you all weeks long here during the earnings season. So be sure to tune in to get all of our Earnings All Stars videos. And I'll see you again next time with some more earnings charts.